Okay, welcome everyone. We're going to get right into the stock market charts. This channel is all about using charts to tell us where the next trades might lie. So it's all about technical analysis and how we can find trade ideas to hopefully make money. So if you find value in this kind of content, leave me a thumbs up. If you want me to look at a specific stock chart, leave a comment below. I do scroll those and look for trade ideas, and if anything looks interesting, I'll point it out in a video. All right, so we're going to start out today with the triple Qs. So all the FANG stocks reported, they're pretty much out of the way. We've got earnings out of the way for these big mega cap tech stocks. So now we're looking for movement. Where's the market going to, what are they going to do with those earnings reports, and where do they go next? Right now on triple Qs, what I'm watching is just on this shorter term time frame. On the hourly chart, you can see we've just been walking up this trend line. This is pretty much earnings week, and this is everything that happened earnings week plus today, starting to crack, and I'm looking for some sort of a sell signal or a breakdown of this trend line, some sort of a break, impulsive red hourly close below this hourly trend line, and that should set us up for what I believe the start of a correction in the FANG stocks. We have big negative divergence on the daily chart that's been building for quite some time. Each new divergent high, and that's basically what we just recently had right up here. This was a divergent high, meaning you had a new high in price, lower high in momentum than the former high. So there's your former high in price. Here's your new high in price. Here's your former high in momentum, and basically an equal high in momentum right there. So that is, but came with a former high, or it came with a higher high in price. So it's negative divergence. Again, if these concepts, if I don't clearly enunciate the concepts in the video, check out my technical analysis training course, link in the description below. I go through all those concepts in detail for 5 or 6 hours worth of training, and I only charge $100 for the course. So it's not thousands of dollars. It's not going to break the bank. Link in the description below. So we have negative divergence up here, and every single divergent high that we've gotten in triple Qs recently, when it's been a negative divergent high, we've got a correction. You can see here we had one, we corrected. Here we had another one, we corrected a little bit, and we have another one. So I'm expecting the start of a correction. Where am I looking for this to go down to? Well, there's lots of different levels we can target, but obviously the former high, 342.50, I think would be a good target for right now, and we'll just keep it at that until we start to see some selling. And that's a drop of about 6% or so in the indices. Okay, so that's triple Qs. That's what I'm looking for. Again, flipping back to the hourly chart, just looking for a breakdown of this most recent trend line on the hourly chart. Moving over to SPY, looking on the daily SPY here. So here's basically the earnings week, and you can see we've just gone nowhere. The market's just gone into a holding pattern, waiting for the next direction or indication of direction. So at this point, I'd probably look at the hourly chart and really look at these lows, kind of this gap area, 435.50, an hourly close below that, and I think that sets us in motion for that correction in SPY. I would target this red trend line right here as the potential, just a good clean target. And right now that's sitting at about 420, 421. That trend line, if you go back to the weekly chart, is a major trend line that the market's really been reacting on for the last decade. But here's your 2009 lows right here. And as you zoom in, you can see we held support multiple weeks there, held support there, held support there, held support all through there, finally broke, and it's been resistance ever since. So resistance here, there's your COVID drop. Now we've recovered it recently, but I think there's a high probability that this is a bull trap and we're actually near the top. But even if we're not near the top of this rally, I would look for, in the minimum, come back in and hit it again. All right, so that's about that 420 level. Now, if that breaks, we've got bigger picture things happening. We're not going to anticipate that right now, but I am looking for a correction that should bring us down to about that 420 area. Just going back to the hourly, it's right down here, 420, somewhere right in there, 421. Okay, so we'll keep an eye on that, see if that plays out. Again, on the daily chart for SPY, clean and clear negative divergence. that remains on the PPO and the RSI. Okay, so these indicate to me that we're likely about to start that correction. We just need to see the price action and the candles start to sell off and the selling to start to get impulsive. Flipping over to the mega cap stocks, Amazon, we had a bull trap in Amazon right now. So this, I have it circled right here. This was a divergent high. See the high, new higher high in price and yet lower high in momentum right there. I have it circled. So negative divergence on Amazon indicated that you had a high likelihood that that breakout that we saw right here over that former high was going to fail. And so far it did. A big gap down and we're back within this big range. So we'll mark out this range. Okay, so I have the range marked out and I think we're heading down towards the bottom of the range. Because we had that false breakout or that bull trap, I think it's now set up to go to the bottom of the range. That should be the correction that we're looking for in the triple Qs as well and the SPY. So things to watch for on that is more selling to come in Amazon. Apple, this one's just hanging on to this support line, which is the former high, which is about 144.50. You can see it right there. We had the breakout. It's kind of just hanging out above there. Looking at the hourly chart, you can see we keep hitting that support and the buyers keep stepping in there. So I need to see that break. That needs to go with an hourly close below there to set for, you know, the selling's not going to happen and you're not going to get a correction in triple Qs unless you see this break on Apple. So I'm not really wanting to short triple Qs until I see that go, but 144.50 area, and that should set us up for a move, at least I believe, down to probably this trend line down here, this daily trend line. All right, so a move down to there, maybe 133, depends on when we get there, but that's what I'm looking for on Apple. And again, big negative divergence is in play. So you'll see there on the PPO, this is a divergent high up here, and on the RSI, same thing, divergent high. So we're looking for that selling, that breakdown candle. Google has been walking up this trend line, this channel, this price channel, and we're right there above it, but this is a divergent high. So we have a breakout above the top end of the channel with negative divergence on both RSI and the PPO. And so it's basically telling me that we're likely going to break back down within this channel and head down towards the bottom of the channel. So that's what I'm watching for on that. Again, you can see it on the hourly chart. Look what we're doing. We're just kind of grinding along this trend line. So I think it's going to break, but we need to see it break before we take action. So that's all I have on that one. And then Microsoft on the daily, big negative divergence has been building for quite some time on the PPO. The RSI recently kind of took out that negative divergence. So we don't have negative divergence on the RSI. On the daily, we have this short-term upward trend line. We broke trend here, back tested, and we've just been drifting sideways right now. So things to watch. Let me grab my, you can see we're just drifting sideways. So I'm just waiting for resolution, I think, on the other fangs. And then we'll see what this one wants to do. Kind of mixed signals on Microsoft at this moment. Real quick on gold. Gold still looks good. Still bullish on gold. We're holding above this 1790. We tested that for quite some time. If you look at the hourly chart, this 1790 is major support for gold, and we've been testing it since July 5th, almost a month of testing that, and so far it's held above support. So I think it's likely that the market's going to recognize that that did hold, and we are going to move higher. Again, on the daily chart, well, really on the weekly, 1790 is major support going all the way back to 2011. We held that as 3 tags of resistance right there, there, and there, and then went into the big bear market. And recently, that's what we're testing and holding as support. So we had a breakout above it. This was a confirmed breakout above that resistance level, 1790. We then, after you get that breakout, we get a big long correction that I think threw off anybody who took that breakout. And now the market is free. It's kind of washed out all the momentum traders that took the breakout, and it's free to actually start to build on this bull market. So as far as I can tell, gold's going higher. The miners still look good, and we should likely continue to move up. Okay, and we'll just do a quick run through some of these short ideas that I've talked about. You can see here BlackRock, up a little bit today, but still just chopping around. We're just still chopping around sideways. Bigger picture, we broke the uptrend line there off the March 2020 lows with divergent high and a bearish rising wedge. So I'm still looking for that downward move, really down to about 790. So still looks good there. AEO, same thing. We've just drifted sideways over the last week. The market didn't want to go anywhere due to the FANG stocks. It wanted to see what those FANGs are going to do. So it's still, this thing's just still drifting sideways. We have earnings coming up, so maybe we'll drift sideways. They'll pop it into earnings up to resistance, and then it'll sell down. That's completely possible. But I still like this short. Ally Bank, broadening wedge pattern here. And I think that is likely signaling that we're going lower. You had an uptrend line here, clean uptrend. We broke that trend. So we're seeing a reversal pattern kind of just below. But ultimately, we had that first leg down, consolidation, and I'm looking for a continuation of the downtrend down to the next level of support. 43, about 43 bucks, roughly right in there. All right, so still looks fine there. Starbucks continues to drift lower. Nothing really impulsive, but it's definitely drifting lower. We had that island cluster top reversal pattern, and we've seen nothing but selling ever since, red candles. So that's confirmation that there are sellers here, and we are seeing a reversal pattern. So I'm still looking for Starbucks to sell down to 109.54, and then possibly another target to watch would be 101.20, and then down in this support range would probably be the final target, anywhere from 93.50 down to 91.50. Schwab keeps drifting sideways, but basically trending lower. Nothing impulsive right now, but I think it's likely going to start to sell down pretty impulsive here any day. I think we're likely going to get a big red candle breakdown. I'm looking for target 62.22 as the next target, and then potential final target on this would be about 51.60, about 51.50 potential final target. But you can see we're just continuing to downtrend, making lower highs and lower lows, and I don't see any indication that that is about to revert. We did put in bullish divergence here on the RSI on this one, but not on the PPO. So mixed signals there. Perhaps we're going to sell down to this next support level and have bullish divergence down here. And maybe that's the bounce target where we're going to get a bounce. But I do see somewhere, about 62.20 in the near future. That looks like a high probability trade right there. MGM, just another indication of a fake out move. This morning I noticed, you'll see on the hourly chart, the very first hour of the day, they spiked it right up, all the way up here to 39.09. And ever since then, they just sold it down the rest of the day. So really from that spike high down to where it's at, that's a drop of 4% so far. And as of right now, we're just basically flat for the day, but you're seeing these kind of spikes and then sell off, spike and then sell off. So the sellers are there in this one. And on the daily chart, I'm still looking for 34 as the next kind of target, and looking good so far. Okay, SQ, I'm not short this one right now, but you can see they're spiking this thing right before earnings. Earnings are coming out here in a couple days, and they're spiking this above the downtrend line. So here's the trend line right there on the daily. It was walking up. We broke trend here and did a series of back tests, and today they're spiking it up. We'll see where this thing closes. They might sell it off into the close and close it down to that 263.44 area. Again, a breakout or a breakdown that occurs right before earnings is pretty suspicious. This breakout also, if you look at it, pretty much was another divergent high. You can see we hit right here and just barely went over those former highs. So new high in price, but lower high in momentum. So you can see there's your negative divergence. So we're seeing a break back above support with negative divergence right before earnings. That's a setup, or I mean that's a suspicious breakout. All right, that's not one that I would trust. So I would look for earnings to come out probably negative is the way that I'd read this. That earnings are going to come out negative here on the 5th, and then we're going to see that movement to the downside after earnings. And a short trade idea that's on my watch list, target, you can see we're just continuing to grind up within this bearish rising wedge with big negative divergence that keeps building and building, and that's how it works. They just build and build and build until they break. When they break, that's when we take our trade. So we're looking for a break of this trend line, the secondary trend line right here on the daily chart. Looking for an impulsive sell signal or breakdown. Earnings coming out here on the 18th of August. So I think it's, we could grind within this wedge until we hit the 18th and then break. Not exactly sure. But as far as I can tell, you had a clear uptrend line coming off the March 2020 lows. You then put in negative divergence, and we broke trend with a big sell signal, but then we created a secondary trend line. So we're just, again, waiting for the breakdown here. Nothing says that you get a sell signal and then it's not going to just create another trend line. That's completely possible. You just have to take the breakdown for what it's worth, and when you see it, you take it. So again, I'm just waiting for that daily breakdown of that trend line. If it happens right before earnings, we'll see. Maybe they'll break, and then earnings will pop it right back up and do a back test. So we'll watch that, but this one's on watch. And this one was just pointed out in our Saturday live session. So I want to point out this one, AMG. Here's your uptrend line. This is coming off September 2020 timeframe. You can see we held support really right through here, and then held it again there. So several reactions on this trend line. We have big negative divergence that's been building. So this was a divergent high. This was a divergent high. You're waiting for a break of the trend line support, and there it is. There's a sell signal. It just happened there on July 28th. We're getting a little bit of back testing, and we could run up and back test, but ultimately I think we got a sell signal on this. Any opportunity to short this thing, in my opinion, right at trendline resistance would be objective. But I actually took a starting short today, and I'll probably add to it on back tests of the trend line. Otherwise, I'm waiting for this to break down. Support is sitting here at about 149. And if we break that, it should be a pretty swift move down to about 118.80. This is a real thin zone, especially right here. If you might get a little bit of a bounce right in there at about 135. But you break into that zone, and you got a thin zone where it's just one straight candle up. So once you fall into that range, you should drop right to support. So I like that as a setup. Okay, so I was just kind of scanning through. I think that's about it. We're watching these FANG stocks. Really, Apple, I think, is one of the major ones I'm watching, just to see if we can break that 144.50 level to get some sort of a short, triple Q short trade going. As far as I can tell, it's priced into the charts that it's going to happen. We've got negative divergence. We've got breakdowns in Amazon. And we're right there on a lot of these other ones. So just keep an eye on that, and I'll catch you guys on the next video. Bye.